Hey there, my name is Giovanni Lugo with Stallion Capital, and in this video, I'm going to go over why your HVAC business is getting turned down for funding. So if you're an HVAC owner that is struggling to get funding and basically you face rejection when applying for loans, credit lines, business financing, and basically why does this happen? Right? And more importantly, how can you secure funding you need to grow? And in this video, I'm going to break all of that down for you. So by the end of this video, you'll understand why traditional lenders reject HVAC businesses, what credit qualifications you need, and how you can get funded even when the banks say no. All right. And also, I want to quickly break down a story of how I actually got into this. So I had a client, I actually run a marketing agency as well. And I had a client who was an HVAC owner and he was struggling to get funding. So basically, I actually got funding for myself to fund all of my businesses. I got $327,000 in business funding. And I actually he came to me because he needed lending. And he needed funding to basically scale his business. So I actually did the same process from him. And that's basically how I got into working specifically with HVAC business owners. Okay, so let's go ahead and then dive in. All right, so why HVAC businesses are considered high risk? So basically, the industry risk perception. So cyclical revenue, HVAC businesses tend to have seasonal cash flow fluctuations, making lenders nervous about the ability to repay. So basically, seasonality of HVAC businesses makes banks really nervous when it comes to lending you money. Okay. The other thing is the high overhead costs, equipment, trucks, tools, and labor adds up, which means high expenses related to the revenue. So basically, everything that you're using as far as running your HVAC business costs a lot of money, and that means high overhead, and they don't like that. That puts them at a higher risk calculation of getting their money back when they lend to you. Okay. The other thing is customer payment delays. So many HVAC companies rely on invoicing and customers don't always pay on time, creating cash flow gaps. So if a customer doesn't pay on time, that could end up putting you behind for your next order, especially if you don't have enough working capital to keep the business kind of rolling. Okay. The other thing is the economic sensitivity. So the HVAC industry can be affected by economic downturns, leading to decreased consumer spending on non-essential repairs and upgrades. So that is another issue as well. The other thing is the high business failure rate. Okay. Statistical reality. So many small HVAC companies don't survive long term due to market competition and operational challenges. So sometimes they run out of money. They buy a unit before actually getting the money for it, things like that. So a lot of issues can come up very quickly. Also, the lender caution. So banks and traditional lenders use industry failure rates to determine lending risk. If too many businesses in your industry fail, they assume yours might too. So there's already a high statistic of basically 90% of businesses failing within the first 2 years. And they basically break that down for each industry and what the likelihood is of your business actually succeeding. So we want to make sure that we take you out of that category with the different strategies that we specifically use to go and get funding when you go ahead and start this business. All right. The other thing is success rate insight. Discuss ways HVAC businesses can avoid failure, such as offering maintenance contracts and diversifying services. There's a couple different ways that you can go about doing this. This is more for upgrades and maintenance, so that way you can kind of keep the cash flow coming in, just as side jobs, things like that. All right. Next, we're going to move into collateral and personal guarantees. So HVAC equipment doesn't count. So lenders often don't accept HVAC tools, trucks, and parts as viable collateral for loans, usually because it's not enough. So that's another side of it as well. The personal assets also at risk. So many HVAC owners are required to use their personal credit and assets to secure funding, increasing personal financial risk. So basically taking collateral for, your house or things like that. So there's a couple of different ways that they can actually get funding, but they usually want collateral for the traditional ways. All right. Now moving into the next section. So why does your credit score make or break you? All right. So first you have business credit versus personal credit. Okay. So what lenders look at, most HVAC businesses don't have strong business credit. So banks rely on their personal credit, which is okay. All right. So the minimum credit score, traditional lenders require usually a 680 plus credit score. But we usually ask you to have at least a 720 or plus, or get you up to 720 or plus before we actually get funding. So that way we can get you the maximum amount. The other thing is the debt to income ratio. So even with a great score, if you have high personal debts, you might be denied. So we usually want to keep your utilization under 5%. That is ideal, but you definitely want to keep it under 30%. Your credit score will go down considerably if your credit utilization is over 35%. All right. The other thing is building business credit. So how HVAC owners can start building a strong business credit profile by opening vendors accounts. That's like Net 30 accounts with Granger and Quill and things like that. And then paying on time. So making sure that you pay all of your payments and have 100% payment history. And then also separating personal and business finances to make sure you keep everything clean as far as just structural wise. And then for number two, so the negative credit factors. So if you have too many inquiries on your basically on your report, they will deny you because they think you're looking for a lot of lending and you're basically scrounging around asking every bank for lending, which makes them makes them feel like you're not somebody who's good to lend to because you're basically just trying to go to everybody to get as much lending as you possibly can, which doesn't look good in your case. Okay, so that's one thing. The other thing is high utilization, like we just spoke about. So if your credit cards are maxed out, lenders see you as a risk. So if over 35%, you want to try to pay that down. Ideally, you want to be under 5%, so that way your utilization is really low and your credit score will really shoot up, and it puts you in the best position to go ahead and get funding. All right. And then late payments or collections. So any negative marks on your report may, the approval is going to be unlikely, which means you won't get approved. So if you have collections on your report, you're definitely not going to get approved. If you have a couple late payments, we can get those removed and then go ahead and basically get you funding after those are removed. So that way it looks like you have 100% payment history, which you can get removed. By the way, you can remove late payments, but you want to overall be 100% payment history when it comes to basically your credit report. The other thing is credit repair strategies. So basically other tips and tricks that we do. So we do have a funding guide. It's a fast funding freeze guide is what we call it. So in the link in the description, you'll be able to click on that and you'll be able to go through our course and we'll show you exactly how to set everything up. So that way you know exactly what to do to get your business in the right setup. So that way you can go ahead and get funding. The next thing is, so the newer businesses usually struggle more. So obviously when you have a lack of credit history or you're a new business that's less than 2 years old, banks usually traditionally won't actually lend to you because your business is so new. So the best way that we do it and the way we go a different route is that we actually go to 0% or low interest credit cards, which basically means that you can actually open up a brand new LLC. And as long as your personal credit is in alignment, as far as like your good credit score, 100% payment history, your utilization is really low, and you have no negative marks in your credit report, then you can get 50 plus to 150 plus in actual business funding, as long as your credit report is in alignment with a new LLC, okay, or S corp or C corp or whatever you end up having. All right. The other thing is, so no established revenue track record. So obviously banks don't want to lend to you if you don't have a track record. This is more of the traditional way, but our ways basically cross all this out. And this is something that you actually don't have to worry about. So basically getting into how we get HVAC businesses approved and funded. So we use 0% and low interest credit card stacking strategies to get you funding. So basically we leverage multiple business credit cards with 0% interest for 12 to 24 months to get you fast and flexible funding. All right. The other thing is there's no collateral required, so you don't need to risk your personal assets to secure funding. So no collateral or anything like that. Also, separation of personal and business credit. So we help you keep your personal credit intact while building your business credit. The reason that this is so important is because when you actually go and apply for a business credit card, that doesn't actually show up on your personal credit report. Okay. But the inquiry does, which is why we go ahead and remove those inquiries off of your personal credit report. So that way your credit report stays clean. Okay. But you still have access to all of that funding. So we've also done this for hundreds of our clients that has worked with us. And we've gotten them over $100,000 in business funding, and they've used that to scale their businesses. And I've literally watched multiple businesses grow over 200, 300, 400%, literally because of the funding that we've gotten for them. So that is something to keep in mind as well. Also, so our credit optimization process. So basically what we do is we give a free credit analysis where we review credit and advise on quick fixes to boost your score before applying. Some of this we can actually do for you. So if you have a couple items that you would like us to remove, we can actually do that for you and then get your business set up and then go ahead and get funding for you. And then also a strategic application process. So we apply to the right lenders in the right order to maximize approvals and avoid unnecessary credit inquiries. What this means basically is that when we apply, we'll go through our funding round, like for example, round one. After we apply to all these banks and institutions, we'll go ahead and wipe your inquiries off of your personal credit report. And then after that, we'll go and apply to more banks. And then we'll remove those inquiries again. And then we do multiple rounds of that. So that way we can get you the most funding possible. So that way when you leave and get all of this funding, your personal credit score is basically intact and it is brand new. It looks still the same as when you walked in. And then the next thing is higher approval rates. So our clients usually get approved between $50,000 to $250,000 in funding without dealing with traditional ways of getting funding, which is very helpful for them. And obviously it bypasses all of the different issues that we talked about earlier. And so the other thing is, so business credit cards don't show up on your credit report, like I was saying. So when it comes to 90% of institutions, most of them do not report to your personal credit. There are some institutions that do, like for example, Capital One would be one of those. So they do report a business credit card on your personal report. There are some other institutions here and there that do that as well. Most of them don't though. So we do pay attention to that as well, and we make sure that we stay up to date on that. For making sure that we see where all of these accounts report on your credit report overall. And then obviously credit utilization strategies. So basically, we want to show you and basically go through how we can help you. Basically when you receive the funding, keep the balances low and pay off statements before interest basically kicks in. Obviously, at the beginning, it's not a huge deal because we get you a lot of 0% interest cards, or we'll get you other credit cards that have a low interest rate. So we basically kind of show you a little bit on how you can help yourself when it comes to paying down cards before certain dates and things like that. And then going into why this works better than traditional loans. So basically faster approval. So banks usually take weeks or months for the entire process. Ours is usually pretty quick. So if you can get instantly approved, or you can get instantly denied, or it can go into pending, which usually it takes about 7 to 14 days to actually get a decision. And the other thing is we help push those applications through with what we have is bank relationship managers, where we go ahead and connect with certain banks, people that work with banks, and can actually push your applications through to get you approved and also get you higher limits. So that's also the other perk of working with us, and how you can leverage that for your business to get even more funding. The other thing is more flexible spending. So use the funding for your equipment, payroll, marketing, whatever business expenses that you need. And then the other thing is better cash flow management. So with 0% interest, you can use your revenue more efficiently without worrying about high loan payments, which is why we get you 0% or low interest credit cards. And then basically just a final thought. So just because traditional lenders reject HVAC businesses doesn't mean you're out of options. You just need to know where to look. All right. So if you want to see how much funding you can qualify for, you can book a free consultation with us today. We'll walk you through the process, help you improve your credit if needed, and get you the funding that you deserve. Okay, so you can click the link in the description and visit our website to get started. So if you found this video helpful, don't forget to like, subscribe, and hit that bell notification. Your HVAC businesses deserves to grow, and we're here to help you make that happen. Okay, so we'll see you in the next video. And don't forget, success in the business is all about knowing the right strategies. Now that you have this information, what you will do next, drop a comment below, and we'll see you in the next video.